What we got, man? Let's talk a little bit of that street slang.
Street slang.
What's up? What you got for us? I know you're gonna teach us. Give us some of that good word, man.
Good word. Woo. Good word about last week. We'll see.
Ouch.
As you can see, we
So
were
painful.
down. We were down on all the indexes, man. Down 5% on the Qs, almost 3% on the SPY, 2% on the Dow, and down 3% on the IWM. Now, last week, I think Dow was the only one that was positive last week by just a little bit, by maybe just a hair. But you can see they're all negative this week. Just an ugly week in the markets. We can't deny that.
Yeah, man.
Just ugly all the way around. We can't deny it.
Yeah, man. It's terrible. Terrible.
So let's take a quick look at the Dow. So Monday, Tuesday, Wednesday, Thursday, Friday. We can see the Dow was the one that tried to hold up in the first half of the week. Actually made a new high. But
Yes, it
Thursday
did.
had a bearish engulfing on Thursday, and then we followed it down on Friday.
Break down that bearish engulfing, man. You speaking that street slang, man. You know
So,
you got to break that down.
so what happens is we've got a nice green bar here, that's bullish bar, and it's overtaken by this red bar, and it overtakes it completely. Watch that entire move out, takes us past let's see here, past the open of that bar, and just like it never happened. Took out all of that bullish action we had. It was enough to bring us down Friday even more under our 20-period moving average. So
yeah,
the Dow looks fairly weak.
Yeah.
And we finally got that bearish crossover also.
You know, I'm not surprised if we don't pull completely back. Because where are we now? What are we in this? 30.
Well, I'm going to show you where we are on the next one here. So this is the next one's got our levels. So we're hurting, man. The Dow is hurting. The good news is we've got two support levels right under us. The one I hope we don't get to is in the 30,000, 33,000 level. I hope we don't get that far down, but there is a support level there. We're on one right now. We're right in the range of one right now, the 30 to 31,000 zone. I kind of think we can try to hold that next week. You know, we got to see how Monday and Tuesday go, but I think we can hold that depending on what happens next week. So just look at the Dow price action next week and see if we can hold this level. And if we can recover some of last week's losses and get back to the 31,400 level. That's what we're hoping for. And if we can get that, you know, we can go back to our recent, we just hit all-time highs in the Dow, man, just last week.
And that's what makes me believe that we're going to pull back to 30,000. I have or what is that, 30, was that 30 to 30,200 to 30,300? That's zone one.
Down here, you think we're going to come all the way down there?
Yeah.
It's a strong possibility. And that's why
that MACD, the reason why is because a large number of the stocks that were working prior to that are Dow stocks or just industrial, stocks or whatever, that just long-standing companies, right? I mean, and for whatever reason, and it could have just been profit taking or whatever. At the end of the month, people have to show that they made a profit, right? You know.
Oh yeah.
So that could have been what's going on in these funds or whatever. But I thought that was a really nasty price action in the Dow. The Dow and the Nasdaq completely traded places on Friday.
Yeah, you're right, man.
And so we'll get into that, I know, sure. But I just feel that if I just think this is going to be breached, if for no other reason, because we just hit an all-time high.
Yeah.
And
so we've got the support levels, guys. So we'll see what happens, man. Thomas is right. There's a high likelihood we can come back down here, retest these lows again. It's a high likelihood.
Watch for that. Watch for that this coming week.
So let's go to the Nasdaq. Woo, man. So the Nasdaq spent all of last week under the 20-period moving average. All of it.
Yeah.
Massive gap down start Monday, gap down again Tuesday. But as you can see, we fought back and, fought back off the lows on Tuesday and recovered a lot of that move, but not enough to bite into this bar. Not enough to get up there. Wednesday, we tried to fight a little bit more. Took us off the lows of Tuesday, which is a pretty good move. But Thursday, and then Friday. The good news I see is that Friday was an inside bar. It didn't break out of the range of Thursday. So this is still intact. We can break to the downside next week or to the upside. We don't know which way we're going to go yet.
So talk to me about, let's break down this. We speaking that street slang and I love it. Talk to me about this inside bar. When we say an inside bar, what are we talking about? So
when you get a massive bar like this is a very volatile bar here, very, very volatile action. This is about 313 till about 322, I want to say. So that's a massive, massive move there. The next day, the volatility was shrunk the next day. We've only moved about, let's see here, this is 314 till about 316 is where we closed that day. So this price action is kind of like a almost sideways movement. Wasn't enough to take us to new highs or new lows out of the previous day's action. So I want everybody, go ahead. It just shows a little bit of indecision, basically. That's all it's really showing, a little bit of indecision.
Now let me ask you this. One of the things that I'm learning about candlesticks is, I use price bars, but as I, tinker with candlesticks on some of my charts just to try to learn them, I'm finding that supposedly if you have a red bar, it's because it closed below the open. And so it seems to me that, closed below the open. Oh, got it. Yeah. So it closed below the open of the previous day.
Yeah.
Gotcha.
So it opened here and it closed here. So it opened is in the range of the previous day. So that's not necessarily bullish or bearish. It's more of a sideways pattern.
Because it opened at the top of this previous day's red candlestick.
Open here. This was it was here intraday action denoted by the wicks. But this is the open and the closing for Friday.
Yeah, sure. Which the opening is lower than the opening and closing for. The opening is lower than the opening for Thursday.
Yes, it is.
Which is why it's red. Gotcha.
Yeah.
Yep. So that's good stuff.
We just got to see next week for that, man. It's a little ugly now, but I like the inside bar. I like that we didn't make any new highs. We didn't close in closing lows. Sorry. I like that aspect of it. And we are right on our support level here. We are right there. The 312, 314 zone, we are right there. And it's held this zone fairly well.
Beautiful.
So
but we don't know.
We have to see next week, guys. See if we can, if the bulls can come in and pick us up off these lows and, come back to the 324 level. I mean, it was there Monday. It couldn't hold it, but it was there Monday. We just got to see. And if we can get back to the 324, we've been looking for a move to the 336, but we've got to take care of this first. We've got to hold the 312, 314 zone.
You have to hold that. And I think if I had to choose, if I was forced to bet on one or the other right now, it'd be the Nasdaq. Just because of how it's performing so far with support and just how far stretched this MACD is.
Yeah. I agree.
It doesn't mean anything. It could be even more stretched at the end of the day tomorrow. But and all week. So I'm not saying that at all, but I am saying that we've come down. If you go back, I mean, we go back to Monday and we're in zone 2. But if you go back to Tuesday, before that, you're in zone 3. Yeah. So we've come from 336 to 312. we're talking almost 10%. We're talking about 8%.
And what I like,
Something
Thomas,
like
I like
that.
how the price action of Friday took us off of that zone. So how you bounced out of the zone there?
Yep.
We're right at the top of our zone. So if we can maintain that Monday, I think we'll be in good shape for the Nasdaq.
Like I said, I'm okay with just sideways action for a few days.
Yeah.
Right. Just a few more of those. That will give me more confidence. But right now, I'm more confident in the Nasdaq than I am the Dow.
Oh yeah. One more thing I want to point out is we are extended from the 20. A stock can extend from the 20, but it can't stay away from the 20. So it's got to come back towards that 20 eventually. We got to come back to it. So hopefully we can get there early. We'll just have to see. So let's go to the SPY. The SPY is just like everything else. We a little bit of turbulence last week. Couldn't hold this bottom. We broke through it on Thursday, set a new low, and broke through it on Friday. So just weak action there also. If you go a little bit deeper, let's take it back a little bit. We still got some room to drop before we get to our zone here. So the SPY's got a little more room to drop. So you get to the 376, 377 zone. And then we got our resistance up here at 389, 390. So we're stuck right in the middle right now.
I would say I'm gonna go out on a limb, and I would say that there's gonna be a third zone for the SPY. This is just my. I'm relatively bearish on everything except the Nasdaq. After this week, I am. I mean, I think it is truly, really, truly. We've said this in the Facebook group. It's becoming a stock pickers market.
Yeah.
Last year was the year you throw a dart at the wall and you pretty much pick a winning stock, right? If you bought at the right time, and most times were the right times because everything was so depressed. Everything was.
Man.
And then you started looking at, your Zooms and all those things taking off. But I mean, we talk about Zoom, talk about Wayfair. Look at Wayfair. That's terrible. I mean, this is amazing. So these is crazy things. We could pretty much, shooting fish in a barrel last year. But right now, I think there's some good stocks out there, but you really have to be picking stocks at this point. And I think that's what these indexes are showing you.
Yeah. And if you're buying anything, make sure you buy close to support levels.
Yeah. Yeah. That have been held, right?
That have been held, correct.
So if you're buying close to support levels, then we're entering in very lightly.
Oh yeah.
But I think I see another support level around this. What do we got here? This looks like a 370 level.
370 down here.
Yeah.
Hey, we can very well get there now. It is a high likelihood we could come down there and we could retest that. It's a high likelihood.
Yeah, I'm not. I won't feel really confident about the S&P until it gets down to that level, and then I think people will start buying with both hands.
Got a little more space. We'll have to see.
Yep.
Let's go to the next one here. IWM. This is I mean, they're all close to the same configuration. I do like this Russell formed almost a bottom here. Didn't go any lower than that, so that's a great sign. We'll see if that holds next week, though. We are firmly in bearish territory here. Try to get a green day on Wednesday. Form the top, and we reverse from that. So we'll just have to see. This is stuck in a range also. We just have to see what happens. And if we take it a little bit deeper, yeah, we're close to our levels here also. We got support at the 217 level. That may hold. I like that action right there. Didn't take it any lower on Friday, so that's a great sign. Resistance levels at 230. We'll just have to see. This isn't as weak as some of the others. It hasn't really broke the 20 that much. So we just have to see. And as you can see, when it does go in bearish territory, it's not there for long.
Yeah. I mean, this is an amazing chart.
IWS has been strong, man. It's been one of the leaders out of the indexes, man, for the past few months. It's been resilient.
Yeah, I mean, the Russell, those stocks have been leading the way, and not besides the Nasdaq, of course. But I mean, they've been really, really outperforming just because of how long they've been underperforming.
Yeah.
So, good stuff. Really good stuff.
All right, so let's go sector overview. Yeah, my God. So for the month, let's take the good news first. For the month, almost everything is still positive for the month of February. Our laggards are technology by 1%, consumer staples almost 3.5%. We've got utilities down by 6%, healthcare down almost 3%, and consumer discretionary down almost 3% also. So our furthest one out is utility. That's the weakest right now for the month of February. Strongest is energy and communications. Well, we've got financials also. So those are leading right now. It's not a lot of, bright spots there, but, the market, they're being tested. All the markets are being tested. I mean, we can't deny that. They are all being tested. Me personally, I'm looking for tech not to lead, but to find its foot soon. If the 10-year Treasury note, if those fears can subside here pretty soon. We'll talk about that a little bit later. But if those fears of the 10-year rising too fast, if we can quell those fears, tech should be able to find its footing.
Yep.
If you're not comfortable trading this market right now, I don't blame you. You can wait it out. If you are comfortable, you can buy the dips close to support that's been holding. But either way, it's going to be a little volatility in the market. You got to expect that. So wait it out or try to play the dips. We've had more decliners than advances this week. More lows than highs. And our down volume has outpaced our up volume. So this was a negative week across the board for the markets. I mean, everything's being tested. We can't deny that. Take a quick look at the commodities. Gold is still in a free fall, down another 3% this week. And look at that massive bar on Friday. That's the largest bar up until the beginning of the year. So yeah, gold is on a free fall. Silver's holding up a little bit better. We got a 23 support zone here that we're trying to hold. As you can see, it jumped off that zone Friday. So this is doing a little bit better, but still down 2% for the week.
Yeah, I mean, with Bitcoin doing its thing, it's going to be hard for gold to really
find any traction.
Yeah.
Oil still rising, so oil is probably one of the bright spots in the market right now. Up 4% on the week. Got a couple of support levels and resistance zones here. First one being the 41 level, and we got if it drops below the 40, we got the 40 level here, and our resistance zone at 42.50. So it's got a little bit of things to play with there. But oil's looking good. So if you see your prices at the pump raise a little bit, it's because of this here. And also of note, we are extended from the 20 here. So we might come back to that and give up a little bit of that up. Have to see how things go next week. But we are extended from the 20.
Now, since we're still talking that street slang, check it out. This 20 period, like, is that a simple moving average, exponential? What
simple.
do you got?
It's simple.
Gotcha.
Natural gas also declining 7% for the week. You can just see that drop all week. right to the support level at the 1013 level. So we'll see if it bounces off next week. Just have to see. We've got our elephant in the market, Bitcoin. So Bitcoin had a little drop last week, also down almost 18%. If you remember, it was up 16% last week. Now we're down 17%. So almost back to where we started almost. It's also got a support level. It's dropped right back into that support level at the 44,000 level. If we can hold here, we're going to try to reach back for all-time highs above 55,000. So look for that bounce probably next week. It'll bounce in this range and it may take out the top, may take out the bottom, but just be mindful of the 44,000 level and the 55,000 level. And against every other asset, as far as commodities and the indexes, only one positive is oil. So not a lot of leaders right now in the market, but crude is still, trying to do its thing. And actually, man, crude is still probably the most traded asset, on the global markets, even still. So there's people that just trade crude, and they're successful traders just trading crude. So still moving.
Something to think about. Is what I love about this what we do here in this street slang section is we give people a sort of an overall perspective of the market, not just individual stocks. And because this is how you start to learn to determine, what to be in. So maybe you don't trade crude, but you might trade a derivative. Like you might decide to trade Exxon. Not to say that Exxon is going up, but we didn't do any work on that chart. But maybe you could start to look at, okay, if oil is going up, what stocks can benefit from that? I mean, we're heading into springtime here in the States, so are people going to be traveling more? People are getting vaccines. Does that mean they're going to be, people who don't drive a Tesla are going to be buying more gas? So people are going to be traveling more. I mean, airlines, they hedge so well, but like the point being is, there are ways to play the market. So you got to, everything else is down, that's green. What should we be buying? Right. So I think this is something this is really beneficial.
Now, this guy here, man, throwing in our backside for almost all of last week. The 10-year bond yield, it went up 5% last week, and that's what caused a lot of the fears in the markets.
I sure do hope that 3/3 range is resistance. Please tell me that.
I hope we can hold that resistance. I hope
if that's what this chart is. That's my takeaway.
Yeah, that's our resistance. We got these two support zones here. So there's a lot of support keeping this thing up, man. The good news is we made a massive a massive move up on Thursday, and we got rid of a lot of that on Friday. So that's one of the reasons the Nasdaq, kind of start to pick up steam a little bit. The 10-year started to lose its hold on it. So we'll be watching this next week, seeing if it still, stays below. I think it's at 1.4 now, 1.41 right now. I hope it stays in that range or gives it up a little bit. That's what we hope, because that's what's scaring a lot of the investors right now. They think this is showing a sign of early inflation, and that's what kind of stopped those guys from putting money into equities. Instead, they're buying bonds. So we'll see if that holds suit for this week. If it does, it's going to be another bumpy week.
Yeah.
So we will be watching the 10-year rate next week. Definitely. So this is some of the biggest movers on Friday. Some of the names with the biggest volume. One that stands out to me is Apple. Apple lost a lot of ground last week. I didn't put the chart here, but it's trying to find a bottom. So maybe if you've been watching Apple for a while, you got your support levels written out. If it drops in your range and you start to see buyers come in, it may be a good time to jump on Apple. only if you see buyers stepping in and taking it off of support zone, because you can see that people are looking at Apple now. It's still close to the low of Friday, so just be mindful of that. Palantir still's got a lot of activity. Fisker is picking up. OCGN is another one that kind of stood out to me.
Why did that stand out to you?
The movements it made, and it's kind of holding its zone, so it's got a pretty good looking chart. Of course, you don't want to touch anything like GameStop. Don't. Of course, it's going to be on this list, but you don't want to play with that.
Let's not play those games at all.
See Carnival on the list making some moves, so there's a lot of things moving around. Rocket mortgage company.
So Carnival. I like Carnival. I like Plug. Plug did its thing this week. I didn't do enough work on it to take advantage of it.
Yeah,
because seeing that is that. But that's probably what happened on Friday.
Yeah, this is Friday here. I want to get one that takes into account the whole week, so I'll be working on that.
But definitely, Fisker. I don't know if you happen to hear what Fisker's doing. Do you know the
battery situation?
No, not the battery situation. They have a really interesting business model.
Yeah, how they're outsourcing all of the parts, and they're just doing the design. Yeah,
as well as they are. So the way they're going to be, they're really tapping into the share economy.
Yeah.
And essentially what they're going to be doing is you can lease their car or whatever, and you can bring it back whenever.
Yeah, I saw that.
Yeah. So it's they're disrupting the service model aspect of electronic vehicle delivery. And I'm really, really, really interested to see how they play that.
Yeah.
Really.
Yeah, I like Fisker also for that same reason. I like their business model. They're outsourcing a lot of the things associated with building their cars. And they're mainly handling, the design portion and, customer relations, which is really making them into a lean green fighting machine. So I like it. As far as their chart, I like NIO's chart a little bit more. It's not on this list, but NIO's got a very good chart coming down to nice support levels. It's looking real good. So
NIO,
another good one.
For sure. I should be kicked because I originally bought NIO around $12.
Man.
So we won't have that conversation today because I don't have enough alcohol in the house to.
What I want, man, I want a true EV ETF, electric vehicle ETF. There's not one on the market right now. I really want to see one of those because there's a lot of electric vehicle companies and battery suppliers and all of that. There's a lot of people in that space.